India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Thank God it's Friday. We are starting this last trading session of this week on a bit of a high because global markets are doing very well and there is lots and lots of stuff to talk about. It's a really vibrant screen, not just here in India, but globally as well. This is Bazaar Morning Call. We are coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, good morning. There couldn't have been a better headline to open the show, Prashant. I completely am with you. Thank God it's Friday. This week feels like it's been like 7 or 8 days, not 5. What about you, Nigel?
7? Much longer, but I love to. Yeah, Prashant just went all out there.
Yeah, we're with you completely. So take it away.
Absolutely. And, the big question here in India, I think at least, is very, very simply put, people have been kind of sort of going on and on about for the last many months now that, large caps is the place to be, tilt your portfolios to large caps. Has that moment finally arrived? That has the large cap rally really begun? I mean, I think that sort of nicely puts the context of the question in a sharp focus. Now, it's early. It's very early. I looked at last 1 week. I looked at the last 1 month, last 3 months. And last 1 week perhaps is where it stands out more. So the Nifty is up 3% last 1 week. Mid-cap index is up just under 2 and the small-cap index is up about 0.6%. You could go one level lower and look at some of the disaggregated sectors, etc., and it'll be more sharper. But this is the kind of headline picture. And it just feels like, just market breadth and other indicators, etc., it does feel like that it's getting narrower and narrower at the top. What is the top of the market cap list is doing better, and that is essentially large caps. Outside of it, there is pressure and there is profit taking, etc. I'll come back to this in a bit. Now, global markets are in a pretty decent place as well, and that is because of 3 things. One is, AI. There's sort of one big theme globally, especially in the US, it's AI. You had Micron earnings there. China, the stimulus, and I'll talk about that. And of course, the big sell-off that we saw in oil prices. Let's start with the beginning, which is Micron. The stock ended 14% higher. They reported numbers, and the read-through is pretty bullish for semiconductors and the entire AI demand story. And I think that is point number 1. Now, question around China is, and with the thing with China, of course, has been that there is they've always tried to do and stimulate the economy through monetary policy, rate cuts and reserve requirement lowered, etc., etc. What happened yesterday was that there was a Politburo meeting, which is the top decision-making committee of the Chinese Communist Party, which was chaired by President Xi. If you look at what was said, there seems to be a more sort of determined effort towards looking at the fiscal side as well. So monetary was coming over the last couple of years, but with little effect. But now I think China is going to look at the fiscal side as well. There is, by the way, talk of sort of putting money directly in the hands of families, a certain amount every month. That is, plain, simple fiscal stimulation. That, I think, is more than anything else what's sort of really excited markets out there. So the question really is this time different, right, for China? Because they've tried many things, but it's not worked. But markets are excited. China ADRs overnight in the US were up between 8 and 11%. Another big indicator, of course, is copper prices, which is back above the 10,000 mark. And this is the first time since July. I'll get to the third big trigger globally, which is oil prices, down about 3%. There was that Financial Times report which said that Saudi Arabia is abandoning its unofficial price target of $100. They want to gain market share. Oil fell 3%. Essentially, the bet is that there'll be more oil out in the market. And the reason why global markets perhaps are excited, we're at the cusp where you want disinflation to allow for central banks to be to allow to cut interest rates, and oil going down. Is disinflation everywhere. That, I think, is the big trigger, apart from, of course, oil-related equities, etc. Now, U.S. equities, they were slightly higher. S&P 0.4, Nasdaq 0.6. European equities were also higher. A lot of China-related plays there. So Euro stocks 50, which is the largest 50 European companies, 2% up. The index ended about 5,000. Dollar index is again testing lower levels, down about 1/3%. We are back in that support zone. About 100.62 is where we left off. And the support is 100.5 to about 100.8. So just to circle back and finish this up with levels, Nifty yesterday broke above. And I was saying this yesterday, is the market move maturing or is this going to run and rip? And the important test is 26,245. We broke that intraday yesterday and then cooled off a little bit, but we broke that. That is 26,245. So you got to look at upside levels here. So those levels are 26,521. Those are Fibonacci extensions. And then look at 26,835. These are near-term levels more than anything. Support for the Nifty stands at the 40 hourly average, which is moved to 25,870. Similarly for the Nifty Bank as well, which yesterday broke above the previous high, immediate resistance at 54,772, and then the psychological number, which is 55,000. And on the way down, supports come in at 53,792, which is the swing low. I mean, we're in a pretty decent place globally. I mean, here, of course, the worry has been that maybe the market's extended too much too soon, and that is also true. But, sometimes you're in a phase like you find yourself, which is pretty unique, right? It's global markets are excited, and here that final inflection into large cap seems to be finally happening. So there is, I think, enough in the tank for the market to stretch a little higher, especially on the large cap. And GIFT Nifty will come up on your screen, give you a sense of how the open is likely to be about 30 points higher. Surabhi.
Prashant, absolutely. And in the market in the last couple of days, we've had a lot of newer sectors come to the party.
Yeah.
So it's been metals this week. It was autos yesterday, the way those stocks were revved up. And now we have more, positive news from China.
Yeah.
And we have positive news on IT as well. IT has not been one of the best performing sectors, but let's see if that happens. First, China, because, excuse me, those rate cuts that were announced, they're finally kicking in now. The reserve requirement ratio drop of 50 basis points, that comes into effect. Not just that, the 7-day reverse repo rate has also been lowered in China from 1.7% to 1.5%. So the market is really rejoicing this. I mean, it's taking it up, lapping it up in every way possible. Though I must say the numbers, the data, the macros out of China are still extremely weak. And one example will be the number that's come out today. If you look at industrial profits, then in the month of August, they have dipped. I mean, there's a contraction. The dip is about as much as 18%, which is far worse than July. July, they still managed about a 4% growth. But August numbers are really, really poor on industrial profits. Anyway, because of the stimulus, the tactical positioning is changing and it's showing up in prices. Look at what China has done this month. The Shanghai Composite is up nearly 7% this month. The Hong Kong market has been the best performer. Look at the rally, 14% higher this month. And the Nifty is actually not too bad. I mean, given the backdrop, still this 5% up move, given the fact that the attention is coming back to the large cap space. Speaking of large caps, like I said, IT is probably going to be turbocharged as well today. At least the Qs are positive. If you look at Accenture, because what is Accenture saying? The revenue for the quarter gone by, the fourth quarter as they call it, is up 5% in constant currency. Outsourcing, which is what we look at, managed service, because it's more comparable to our large listed IT companies. That number is up 7% in constant currency, YOY. And even the consulting piece, that's returned to growth after, I think, 6 quarters of decline. Accenture's consulting business is back on the growth path. The guidance seems quite good. The market likes it, 3 to 6%. That also includes possible inorganic growth, but 3 to 6% is the range. And they're saying that even margins will improve in the year ahead. So it's an all-round good performance, sounding confident, and let's see if we get some of that rub-off on IT. Then there is Deal Street, which is always buzzing. And in a bit, we'll hear Nimesh talk about this because he alerted us on Pratap Snacks. Remember yesterday, the snack makers, Gopal and Pratap, were up. Pratap closed up 20% on circuit. And now the news is out because we have some marquee names checking into the company. Autumn Investments and Mr. Madhusudan Kela, they are buying almost 47% stake. And then there's an open offer that's going to be triggered at 846. So this definitely is going to be a big stock in focus today. Block deal action, that's pretty much what's been driving it. But we have a lot of top-down positivity as well. And that's been showing up on the Nifty too.
Well, that's right. And it's the start of a new series. So let's tell you about the rollover picture right away. And the rollover as well for this series are a little bit higher than what we saw on an average of the last series. And on the Nifty itself, you're seeing long rollovers. The total open interest is much heavier than what we saw at the start of the last series. And on the Nifty Bank, well, a couple of sessions ago, when that period expired, there was more of a short covering that did see out. So long rolls is what you've seen. For September, what stood out was the return of the large cap names. They came back into play because the large caps outperformed the broader markets, and also the Nifty Bank found its form, and that's going to be a crucial component from here on as well. What are the key factors to track for the October series? Crude oil prices have been subdued. They need to be subdued. Big macro tailwind for us. The second factor is, the large caps. They have been outperforming. Can that continue? I think, you'll be leaning towards that given the kind of underperformance you've seen between large caps in comparison to the broader market. So that's the other one. And the third factor is metals have seen a melt up. And if China is going to come back, this could be the sector to track even from here on. So those are the top 3 points. What does history suggest for the October series? Well, for the Nifty, more often than not, we have ended in the positive. 8 out of the last 10 years, average return of around 1.7%. On the Nifty Bank, it gets even better because the average return that we've seen in the last 10 years is nearly around 3.9%. But let's broaden this data point, and that's come out, from a note from IIFL Alternate Research. They're saying that, the Nifty 200, it's seen more than 10 consecutive months where we have seen gains. That's the winning streak. And in both cases, the index is up close to 38%, which is very encouraging, right? The Nifty 200 moves up. But what happened post that 10 years ago, the next 3 months were followed by some pain. So the bulls will be hoping that history doesn't repeat itself, because in 2014, the next 3 months, the Nifty 200, well, it corrected close to around 16%. So that's just the data point for the October series. What about the FIs and the clients? They're opposite ends of the spectrum. The FIs are even more net long in comparison to what we saw at the start of the last series. The clients, they're even more net short in comparison to what we saw at the start of the last series. On stock futures, though, both of them, they're net long. So they are, in agreement out there that this could be a stock-specific market. For today, the Nifty IT index, well, that's going to be important because Accenture's numbers were quite good. 15% of the total weightage on the Nifty is towards IT stocks. And consulting, they're suggesting, could come back. And consulting is a positive for Indian, IT companies because it could mean that discretionary spends do come back as well. Finally, the levels on the Nifty, it appears we're moving towards the 26,500 odd mark. So that becomes the first resistance zone. On the downside, the 25,800 odd mark, that's going to be the crucial mark as well. Since we're talking about this melt up in China and the stimulus that's happening out there, Vedanta, that could be the buy on dip stocks from here on, because you have the Fed that's cutting rates and you have China that's stimulating the economy as well. So keep an eye out on that one.
All right, Nigel, thanks very much for that. So there is a fair bit to track as we go on. Let's get you some more opinion. This is Mahesh Nandurkar of Jefferies, who is weighing in. He says that corporate sentiment at the Jefferies Third India Forum seems strong with private investments rising. He says valuations are a key concern for FPIs, but willingness to explore new ideas from industrial and capex segment was visible. He adds government's tone was a little more welfare focused, even as senior ministers addressed investor concerns. Mahesh says India remains one of the best long-term equity market opportunities, though near-term can be volatile due to unsustainably high domestic flows. All right, well, that's Mahesh with his thoughts coming through.